Good morning. Today is Monday, April 19th, and in this week's recap, good indicators for earnings season and other economic data lead to record highs for stocks. So that's what we're going to be talking about here today. But before we do, just a quick reminder to be setting aside your unwanted and your unneeded documents for the entire month of May. You are welcome to bring them to our office and we will properly shred and dispose of them for you. If you'd like to come by the office on Friday, May 28th, from 11 a.m. to 1 p.m., we'll have an open house. We'll have lunch provided, and you can see your documents get destroyed. For details, I've posted some information on our website as well as on our Facebook page. If you go to www.investwithccg.com, up here in the upper right corner, click on Education and Events, and you'll see the Shredding Party event on May 28th. But again, feel free to bring your documents by anytime during the month of May, and we'll be shredding them on that day for you. And for those of you that would like to see your documents get destroyed, you can come by on the 28th, and we will have the shred truck here on that day, as well as some lunch and some time to spend together. So I've also put this information on our Facebook page. So if you go to our Facebook page, go to the events section, you'll also see that there. If you have questions about what you can shred and what you need to keep, in both cases, if you scroll down, you'll see our Keep It or Toss It guide. Just click on that, and it's a great handy tool to help you go through all the different documents and know what you should keep, what you can shred, how long you should keep certain documents, etc. So go ahead and grab that free tool while you're there. All right, so with that, I'm going to roll the intro, and then we will dive into this week's update.
Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update.
All right, might be having some technical difficulties here, so bear with me. Computer seems to be going a little bit slow here today. So let's look at last week. So stocks reached record highs last week, riding the tailwind of improving economic data and a strong start to earnings season. Let me bring my chart here to the front for you. The Dow Jones Industrials average rose 1.18%, while the Standard & Poor's 500 gained 1.37%. The NASDAQ Composite Index added 1.09%, and the MSCI EAFE Index, which tracks developed overseas stock markets, climbed 1%. For those of you who have a custom SmartMix portfolio, we've just updated our website. You can find more clarity, recent performance, and more if you just type into your browser www.smartmixportfolios.com. You'll be able to go and check that out. So stocks rallied early in the week last week on strong retail sales, a sharp drop in initial jobless claims, and a retreat in bond yields. Stocks then climbed to fresh record highs on Thursday, with the Dow Jones Industrials average rising above 34,000 for the first time, and the S&P 500 approaching 4,200. The market overcame some initial jitters arising from health authorities recommending a pause on a COVID-19 vaccine. Stocks also looked past an increase in the Consumer Price Index and a Federal Reserve report that indicated businesses were raising prices. A surge in housing starts helped the rally, with stock prices moving higher to close out the week. Last week also provided insight into the economic recovery, and the numbers vindicated the optimism that has driven markets higher. An acceleration in inflation was expected, but came in at a rate of 2.6% that didn't appear to rattle the markets. It was, however, retail sales, new jobless claims, continuing unemployment claims, and housing starts that emboldened investors. Retail sales came in at an increase of 9.8%. New jobless claims came in at 576,000. This is the lowest level since March 14th of 2020. Continuing unemployment claims came in at the lowest 4-week moving average since March 28th of 2020. And housing starts were up 19.4%. So again, all of these different indicators emboldened investors. Confirmation of this recovery came with the start of the new earnings season, which kicked off with strong earnings that in some cases exceeded Wall Street consensus expectations. Remember, later today, I will be emailing out our full economic update. If you're not getting this and would like it, you can subscribe at our website. In this update, we also have our financial tip of the week, companies reporting earnings. It's a busy season right now. Financial data that we're watching, plus a quote and a little bit of fun with a riddle for you.
Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.